Hey everyone, welcome back for another deep dive. Today we're tackling Godavari Biorefineries Limited.
Oh, interesting.
Yeah, they're gearing up for their IPO, and tons of you have been sending in their draft red herring prospectus like crazy.
Yeah, it's quite a hefty document.
It is. But that's why we're here. We're going to break it all down for you. The industry, their business model, their financials, those make or break risk factors, all that good
Some
stuff.
good stuff.
But honestly, what I think is really exciting about this one is that we get to see if they can ride this wave,
Yeah.
the bio-based chemicals market that seems to be like exploding.
Yeah, it's a hot market right now.
It is. And to help us sort of connect all the dots, we've got our expert here ready to pull out those. So what's insights from all this data?
I am ready. Let's do it. This prospectus, I mean, it is packed. It is a gold mine of information.
Oh, it is. It
Yeah.
is. So let's start big picture. What is the bio-based chemicals market all about, and why should our listeners even care?
Okay, so basically, this market is all about creating environmentally friendly alternatives to your typical traditional chemicals. The ones that often rely on those fossil fuels, which not great.
Right. Got to move away from those.
Exactly. And the demand for these bio-based alternatives, I mean, it's through the roof. We're looking at a market that was valued at a whopping 97.2 billion US dollars just last year. And get this, projections show it could hit 159.3 billion by 2028.
Okay, so wait, hold on. What is that? A growth rate of over 10% every year?
Yeah, over 10% per year. Pretty impressive.
That is wild. So what's fueling this incredible growth? Like what's the magic ingredient here?
Well, a lot of it boils down to this global push for sustainability, right?
Yeah.
Consumers want eco-friendly products, and companies are really trying to keep up with that demand. And then on top of that, you've got governments worldwide cracking down on the use of hazardous chemicals, which makes these bio-based alternatives even more appealing.
So they're kind of getting like a push and a pull at the same time.
Yeah, exactly. A perfect storm for growth.
Interesting. So it sounds like Godavari Biorefineries is stepping into a market that's like ripe with opportunity. So where do they fit into all of this? What's their like origin story?
So they're a really big player in India, like a major force. They have the largest integrated biorefinery in the entire country as of March 2024. They're also one of India's top ethanol producers. And this is pretty cool. They're the world's largest manufacturer of MPO.
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 MPO. Now I got to admit, I need some help on that one. What is MPO?
So MPO stands for 3-methyl-3-pentene-1-ol. And it's a chemical that goes into a surprising amount of stuff. We're talking fragrances, medicines, all sorts of things. But here's what I find really interesting. Godavari is one of only 2 companies on the entire planet making natural 153-butylene glycol, which is another crucial chemical. And get this, they're the only company in all of India producing bioethyl acetate.
So they've carved out some like really specific niches for themselves.
Yeah, they're not just riding the wave, they're kind of like creating their own little waves within this big wave.
I love that. So how do they do it right? Like what's the secret sauce? How does their business model actually work?
It all starts with, believe it or not, sugarcane. They've totally mastered this concept called sugarcane valorization, which sounds very fancy. But basically, imagine squeezing every bit of value you can out of that sugarcane, like turning it into fuel, turning it into chemicals, sugar, you name it, even electricity.
So they're not just a sugar company, they're like a sugarcane powerhouse.
That's a great way to put it. And the coolest part? They're not even close to done. They've got big plans to really pump up their ethanol production. They're even moving into second-generation ethanol, the kind that's made from bagasse, that leftover sugarcane pulp.
So they're really doubling down on this whole sustainability thing,
Yeah.
even using the waste products to create more value. That's amazing. So let's talk money, right? How do these revenue streams actually break down for them? Where's the money coming from?
All right, so in fiscal year 2024, their total revenue was a cool 16,866.65 million.
I like the sound of that.
A big chunk of that, a really big chunk, comes from their ethanol production. A lot of that is thanks to India's ethanol blended program. It's this program that's pushing to have more and more ethanol blended into the petrol supply.
Oh yeah, I've heard about that. That's a big deal, right?
It's huge, and it's been a major growth driver for Godavari. Their bio-based chemicals also bring in a good chunk of revenue. They supply all sorts of industries, personal care products, pharmaceuticals, the whole gamut. That kind of wide reach really helps them spread the risk a bit.
Right, not putting all their eggs in one basket.
Exactly. But there's a catch, of course. A large portion of their revenue comes from just a handful of customers and really just a few specific products.
So their success is kind of like tied to those key areas continuing to perform well.
Yeah, and also to them being able to diversify that customer base a bit more.
Right. It's like walking a tightrope a little bit.
Yeah, it is. It is. So let's peek into their financials, see how they're managing all this. Their profit and loss statement for fiscal 2024 shows a total income of 10.64 million with a profit after tax of 122.99 million. Their earnings per share, both basic and diluted, stand at 2.93.
Okay, now help me break that down. What does that earnings per share number really tell us? Is that good? Is that bad? Is that average?
So basically, you can think of earnings per share as like the portion of the profit that's allocated to each outstanding share of the company's stock. So in simple terms, it tells us how much profit the company generated for each share held by investors.
Gotcha. So the higher the number, the better, right?
Well, it's not quite that straightforward.
Right.
2.93 might seem small, but we need some context. We have to compare it to previous years, industry averages, their growth trajectory. All of that helps us really understand its significance.
So it's not just the number itself, but what it tells us about their profitability and their potential, for returns for shareholders.
Exactly. Now, looking at their balance sheet, things get a little interesting. Their net worth sits at 2,602.45 million, and their net asset value per share is 62.05, which honestly looks pretty healthy. But there's a but here. We've got to consider their debt level, which is significant. We're talking 6,540.62 million in borrowings as of March 31st, 2024. And that doesn't even include the accrued interest.
Whoa, okay, hold on. That's a lot of debt. Isn't that a bit of a red flag for investors?
It definitely raises some questions. High debt like that can make a company pretty vulnerable, especially if interest rates go up. That can really eat into their profits and limit their ability to, invest in future growth.
Like a weight holding them back.
Kind of, yeah. But there is a silver lining here. Their IPO plan includes using a big chunk of that money they raise to pay down that debt.
Oh, okay. So that's good, right?
It is. It shows they're serious about getting their financial house in order, which can be a really good sign for investors who are looking for, a more stable investment.
So it's like a trade-off, right? They have to manage that debt while still trying to grow and expand. Before we dive into the specifics of the IPO and how they plan to use the funds they raise, I want to talk about, the people behind the numbers. Who are the masterminds behind Godavari Biorefineries?
So the main players, the key promoters, are Samir Shantilal Somaya, Lakshmiwadi Mines and Minerals Private Limited, Sakarwadi Trading Company Private Limited, and Somaya Agencies Private Limited. And Samir Shantilal Somaya, he's a really important figure here. He's both the chairman and the managing director. He's got tons of experience in the industry, and his leadership is something that investors really look at closely.
Right. You want someone at the helm who knows what they're doing, especially when a company is about to, take that leap and go public. What about other stakeholders? Who else has skin in the game here?
That's a great question, and it's important to look at. The shareholding pattern right now is kind of a mix. You've got the promoter holdings, you've got some corporate holdings, and then individual shareholders too. And after the IPO, the promoters, they're still going to hold a big chunk of the company, like 10% of the outstanding equity share capital.
Okay, so they're not just cashing out completely. They're in it for the long haul, right?
It seems that way.
Which is good for potential investors to see, right? Shows they're confident in the company's future.
Hmm.
Now, every business has risks, right? It's unavoidable.
Yeah.
So what are some of the challenges that Godavari Biorefineries might be facing?
Absolutely. And this prospectus does a good job of outlining those risks. One of the big ones is their dependence on sugarcane as their primary raw material. If something happens to the sugarcane supply, like prices fluctuate wildly, or there's a shortage, or even if the quality takes a hit, it can directly impact their profits.
It's like putting all their eggs in one basket, which is always a bit risky. What if there's like a bad sugarcane harvest?
Yeah, that could really hurt them. And they're not immune to competition either. In India, they're up against companies like Alkylamines Chemicals Limited and Jubilant Ingrevia Limited. These are big players in the bio-based chemicals market. And then globally, they've got to compete with those giant chemical companies that are starting to make the switch to more sustainable practices.
So it sounds like it's a pretty fierce landscape. How do they plan to stay ahead of the game? What are their strengths?
Well, one of their biggest advantages, like we talked about before, is that integrated business model. They control the whole process, from sourcing that sugarcane all the way to getting those finished products out the door. That gives them a ton of control over costs, over quality, even over their environmental impact.
It's like a well-oiled machine, right? Everything's working together smoothly.
Exactly. But even with a well-oiled machine, there can be hiccups. And one of their weaknesses, like we mentioned, is that reliance on just a few key customers and products. That makes them vulnerable if something happens to those markets or those relationships go south.
So diversification is key. They've got to spread those guts.
You got it. Another risk they need to keep an eye on is regulatory changes and all the stuff that comes with environmental compliance. The bio-based chemical industry is heavily regulated, and any new rules or regulations could really increase their costs or even disrupt their operations.
Yeah, they're in pretty sensitive industries, so they've got to be on top of their game when it comes to sustainability and making sure they're following all the rules.
Absolutely. And let's not forget about their dependence on the success of India's ethanol blended program. If the government decides to scale back that program or shifts its focus, Godavari could lose a major source of revenue.
So their success is kind of tied to government policy to some extent, which is always a bit of a gamble.
It is. It reminds us that even the most promising companies can be affected by external factors that are totally outside of their control.
True, true. And speaking of external factors, we can't ignore the big one, right? The macroeconomic environment. What's going on globally and in India, and how might that impact Godavari?
That's a great point. The global economy is facing some, let's call them headwinds right now. Inflation is up, interest rates are climbing, and there's a lot of geopolitical uncertainty in the mix. All of that can have a real impact.
It's like there are all these things swirling around that can affect a company's performance. It's a lot to keep track of.
It is. So rising inflation, for example, that could make their input costs go way up, which squeezes their profit margins.
Right, because if it costs them more to produce their stuff, but they can't raise their prices, they make less money.
Right. And then those interest rate hikes, those can make it more expensive for them to pay off their debt, which also eats into their profits.
It'd be the double whammy.
It is. And then you throw in those geopolitical uncertainties, which can disrupt supply chains, make commodity prices go haywire. All of that can mess with their raw material costs, you know?
So it's like a domino effect. Everything's interconnected.
Exactly. Now, when we zoom in on India specifically, their economy is actually pretty resilient. But it's not immune to these global trends. Government policies can change, commodity prices can swing, and currency fluctuations can all have an impact on Godavari's performance.
So for anyone thinking about investing in Godavari, it's not just about looking at the company itself. You got to keep an eye on what's happening globally and within India too, right?
Absolutely. Context is key.
All right, so let's wrap up this part of our deep dive by focusing on the IPO and what Godavari plans to do with all that money they're hoping to raise. We know they're putting a big chunk towards paying down that debt, but what about other areas? Are they investing in any, exciting growth opportunities?
So beyond tackling that debt, they're also allocating some funds to boosting their working capital. That's essentially the cash they need to run their day-to-day operations and, fuel their expansion plans.
So it's like making sure the engine keeps running smoothly while they're, plotting their course for growth.
Exactly. They're also putting some money aside for general corporate purposes, which gives them some flexibility to deal with any unexpected expenses that might pop up, or maybe to make some strategic investments.
It's like having a rainy day fund for the business. Always a good idea.
You got it. But they're not just playing it safe. They're also focused on making their ethanol production even bigger, which makes sense considering India's push to have more and more ethanol blended into petrol. That could be a really lucrative market for them.
Yeah, it's smart to align their strategy with what's happening in the market and where the opportunities are. So kind of doing a bit of both, right? Solidifying their financial position while still chasing those growth initiatives. But before we jump into the next part of our deep dive, I want to circle back to something you mentioned earlier, the related party transactions. You said they leased their registered office from another company within the Samaya group, right? Are there any other transactions like that we should be aware of?
Oh, yeah. And some of them are even more significant than just a simple office lease.
Oh, okay. Now I'm intrigued. Tell me more.
We'll dive into all those juicy details in part 2.
All right. Can't wait. Stay tuned, everyone.
All right, so let's get into some of these related party transactions, the ones that might raise an eyebrow or two. But remember, it's not automatically a bad thing. The key here is transparency.
Transparency is key. So give me the lowdown. What kind of dealings are we talking about here?
Well, on top of that office lease, Godavari also has this pretty big agreement with another company within the Samaya group, Brihan Maharashtra Sugar Syndicate Limited, and they're buying, get this, a big chunk of their sugarcane from them.
Wait, so they're buying their main ingredient, their raw material, from a company that's basically part of their own group. That sounds like a conflict of interest waiting to happen.
I get why you'd say that. The big worry is whether they're getting a fair price, or if this whole setup is giving an unfair advantage to that related company. But like we talked about before, these deals have to be disclosed right. And they have to be able to prove that it's all above board, that they're getting terms that are comparable to what they'd get from any other supplier.
Okay, but it still feels a little, I don't know, a little too cozy. What else is going on?
Well, they've also got loan agreements with Somaya Agro Industries Limited. And they've borrowed money from some other related parties, too. Again, this kind of stuff is under a microscope. And the company has to show that those interest rates, those terms, everything is in line with what they'd get from, say, a bank or another lender that's not connected to them.
So for investors, it's like, do your homework right, look closely at these related party transactions, and make sure you're comfortable with how they're handling all of that. Thanks for breaking that down. Now, let's shift gears a bit and look at the big picture, the industry as a whole. We talked about competition earlier, but let's dig a little deeper. Who are the big rivals for Godavari, and what kind of headwinds are they facing out there in the market?
They're up against competition both in India and globally. Within India, they've got companies like Alkylamines Chemicals Limited and Jubilant Ingrevia Limited.
Hmm.
These are big players in the bio-based chemicals space. And then on the world stage, they're going up against those massive multinational chemical companies that are, finally starting to see the light and shift towards more sustainable practices.
So it's a crowded field,
Mm-hmm.
and it sounds like they're going to have to be really smart to stay ahead of the game.
Yeah, it's all about innovation and strategy. They can't afford to just sit back and relax.
What are Godavari's like superpowers? What sets them apart from the competition? What are they really good at?
One of their biggest advantages, which we've touched on a couple of times, is that integrated business model. They control the whole shebang, from sourcing that sugarcane all the way to delivering the final product. That gives them a big leg up when it comes to managing costs and ensuring quality.
It's like they've got all the pieces of the puzzle,
Yeah,
right?
yeah.
And they fit together perfectly.
Exactly. And another strength is their commitment to research and development. They've got a dedicated R&D facility in Navi Mumbai, and they're constantly working on new bio-based products, trying to innovate and stay ahead of the curve.
So they're not afraid to invest in the future, which is a good sign. But let's be real, every business has its weaknesses. What are some of the challenges they're going to need to overcome to really achieve that sustainable growth?
Well, we talked about that reliance on just a few key customers and products, which always makes them a bit vulnerable. They've got to diversify, spread the risk a bit more.
Don't put all your eggs in one basket.
Yeah, exactly. And then there's that elephant in the room, their financial situation. Those high debt levels, those can really limit their options. It's like trying to run a race with a weight tied to your ankle. They are using some of that IPO money for debt reduction, but they've got to be really careful about how they manage their finances moving forward.
It's a delicate dance, trying to grow and expand while also keeping your financial house in order. Now, let's talk about valuation. This is where things get really interesting for investors, right? How do we figure out if Godavari is a good buy at the price they're offering?
That's the million-dollar question. And there's no magic formula, unfortunately. It takes a lot of digging. You have to look at their financial track record, their potential for growth, how they stack up against other companies in the industry. And of course, you've got to consider all those risks we've been talking about.
So lots of homework for potential investors.
Definitely. One way to start is by looking at those key financial ratios, like price earnings, price to book, enterprise value to EBITDA, all those lovely acronyms.
Okay, I'm going to need a translator for some of those. What do those ratios actually tell us?
So the PE ratio, for example, that gives you a sense of how much investors are willing to pay for each rupee of earnings. A really high PE ratio, that could mean investors are super optimistic about the company's future. A low PE ratio, maybe not so much. And then the PB ratio, that compares the company's market value to its book value, which is basically its net worth. A high PB ratio might mean the company's overvalued, while a low one could suggest it's a bargain.
So we're looking for clues, right? Trying to figure out if the price is right.
Exactly. And then there's that EV/EBITDA ratio, which takes into account the company's debt and cash. It gives you a more complete picture of its overall value.
So we compare these ratios to industry averages and historical data, and that gives us some idea of whether Godavari's price tag is, in the right ballpark.
Exactly. It helps you compare apples to apples. But remember, these ratios are just one piece of the puzzle. You got to look at the whole picture, their growth strategy, their position in the market, all those risks we talked about. It's all about making an informed decision.
It's not just about the numbers, right? It's about the story behind those numbers and whether that story makes sense for you as an investor.
Absolutely. Now, let's not forget about the big picture, that macroeconomic environment we talked about. How might those global and Indian economic trends play out for Godavari?
Right. The world's a pretty volatile place right now. We've got inflation, interest rates, all that geopolitical stuff going on. How might all of that impact Godavari?
Well, those global trends can have a ripple effect, right? Inflation, for example, if it keeps going up, that could really increase Godavari's costs. And if they can't raise their prices to compensate, that squeezes their profits.
Like a vice, squeezing them from both sides.
Exactly. And those rising interest rates, those can make it more expensive for them to manage that big pile of debt they've got, which again hits their profitability.
It's a tough environment for any business right now. Lots of challenges.
It is. And then you've got those geopolitical uncertainties, which can throw a wrench into everything. Supply chains get disrupted, commodity prices go crazy. All of that can impact their raw material costs.
It's like a house of cards.
Right.
One thing affects another and it all comes tumbling down.
Kind of, yeah. It's a delicate balance.
Yeah.
Now, when we focus on India specifically, their economy is in pretty good shape, all things considered, but they're not immune to these global forces. Government policies, commodity prices, currency exchange rates, all of that can impact Godavari's performance.
So it's like if you're thinking about investing in Godavari, you've got to be aware of what's happening both globally and within India. It all matters.
Context is everything.
Okay, so let's wrap up this part of our deep dive by circling back to the IPO and how Godavari plans to use the money they raise. We know debt reduction is a big priority, but what about growth? Are they putting any of that money towards, expanding the business, exploring new opportunities?
So in addition to tackling that debt, they're also setting aside some funds to boost their working capital. That's basically the cash they need to keep the lights on, pay the bills, and fund those expansion plans.
So keeping the engine running smoothly while they're navigating the road ahead.
Exactly. And they're also earmarking some money for general corporate purposes. That gives them a bit of a cushion, for any unexpected expenses or maybe some strategic investments that come up along the way.
It's like a rainy day fund for the business. Always a good idea.
You got it. But they're not just hunkering down and playing it safe. They're also putting some money towards expanding their ethanol production capacity, which is smart considering India's big push for ethanol blending. That's a market with a lot of potential.
Yeah, it's all about riding that wave, taking advantage of the opportunities that are out there. So they're doing a bit of both, right? Shoring up their finances and also positioning themselves for growth. Now, before we jump into the final part of our deep dive, I'm curious about the shareholding structure. Who are the big players, the ones holding those stakes in Godavari Biorefineries?
Let's take a look at who owns what and what it all means.
Okay, so let's get into the nitty-gritty of who owns what. Who are the big names in Godavari Biorefineries' shareholding structure?
Well, as of the date of this prospectus, it's a mix. Pretty standard. You've got your promoters, the ones who basically founded and control the company.
Right, those are the folks we talked about earlier, Samir Shantiel Samaya and those various Samaya Group companies. But what about the corporate side of things? Any big names jumping out at you?
Yeah, one that stands out is Mandala Capital Limited. They've got a pretty substantial stake, which they picked up through an earlier investment round.
Mandala Capital, huh? Aren't they a pretty well-known private equity firm?
They are. And their involvement, it kind of adds a layer of legitimacy to Godavari.
Right, because it's like if a big player like that is willing to invest, they must see something promising.
Exactly. Private equity investments are often a good signal, a vote of confidence in a company's potential.
So, good sign for other investors. What about individual shareholders? Any familiar names in the mix?
Well, aside from Samir Shantilal Somaya, who's both a promoter and a major shareholder, you've got some other members of the Somaya family and then a bunch of other individual investors. It's a pretty diverse group, which is a good thing, shows broad support for the company.
Yeah, it's not just an insider game, which is always reassuring for potential investors. But let's not forget about the regulatory landscape. Godavari is playing in a pretty heavily regulated field, right?
Oh, absolutely. Ethanol production, bio-based chemicals, sugar manufacturing, power generation, all of that, it's a regulatory maze. Permits, licenses, compliance requirements, you name it, both at the central and state level in India. And the environmental regulations, those are especially strict.
Makes sense. They're working with some potentially hazardous stuff. They've got to be super careful and responsible.
Exactly. Sustainability is key. And they need to stay on top of all those regulations to avoid any penalties or, damage to the reputation. That kind of stuff can be costly, especially for a company that's about to go public.
So it's something for potential investors to keep in mind, right? Those regulatory risks. Any changes in the rules could impact Godavari's bottom line. Now, let's make a step back for a second and think big picture. What's the so what here? Why should anyone care about this company?
That's a great question. And I think the answer is that Godavari Biorefineries, they're not just a company, they're part of something much bigger. They're at the forefront of this global shift towards more sustainable bio-based solutions. Their products have the potential to really make a difference. We're talking about reducing our reliance on fossil fuels, lessening our impact on the environment, creating new economic opportunities.
It's like they're not just about making money, they're about making a positive impact.
Exactly. And their success or failure could have a ripple effect throughout the entire industry.
It's a good reminder that investing isn't just about, picking stocks and hoping they go up. It's about supporting companies that are trying to do good in the world.
Couldn't agree more.
All right, so as with any investment, there are opportunities and risks with Godavari Biorefineries. We've explored a lot of those today. Their business model, their financials, their growth potential, the risks they're facing, their management team, those related party transactions, the shareholding patterns, the whole nine yards.
Yeah, we've really gone deep on this one. We've given everyone a lot to think about.
We have. Now it's up to each individual investor to do their own research, weigh the pros and cons, and decide if Godavari Biorefineries is the right fit for their portfolio and their risk tolerance. No two investors are the same, right?
Absolutely. What works for one person might not work for another. It's all about finding what aligns with your goals.
Exactly. And that's what we're all about here, right? Giving you the information and the insights you need to make smart, informed decisions. So before we sign off today, I want to leave everyone with one final thought, something to chew on. India has set a pretty ambitious goal. They want to achieve 20% ethanol blending with petrol by 2025. How do you think Godavari Biorefineries, with their focus on ethanol production, might be able to capitalize on that? Something to think about as you're considering their growth potential.
Great question. It'll be interesting to see how that all plays out. This whole bio-based chemicals industry, it's a dynamic space, constantly evolving, and Godavari Biorefineries is right in the thick of it. Their journey will be one to watch, that's for sure.
It will. Well, thanks for joining us on this deep dive into Godavari Biorefineries Limited. We hope you found it insightful, and we'll see you next time for another deep dive into the world of investing. Happy investing, everyone!